IGCSE Accounting, May 2024. As usual, let's read the requirement and be sure of the requirement before we read into the details. Requirement 1 is to state what business document shows when direct debit insurance was paid. This one we can quickly answer it now. The company's payment through direct debit will be reflected in the bank statement. Right. Let's continue. Which of the errors listed in 1 to 5 above is an error of principle? Later, when we go through, we'll try to answer this one and read the details in 1 to 5. Let's be clear about what are the requirements. Prepare the journal entries to correct the errors of 1 to 3 only. Narratives are not required. This will save our time. Is there any other requirement? C1. State why a balance may remain on the suspense account. Why balance remain on a suspense account after errors have been recorded. We can also quickly answer this one. Right. A suspense account is to hold the difference between the debit and credit side in the trial balance because the error has yet to be identified. If after errors 1 to 5 has been corrected and there's still balance remaining, that means only one thing. There are still other errors that have yet to be discovered and no correction done yet. Okay, so that's the 1 mark for this part. Next, C2, we have to prepare the suspense account and to bring down any remaining balance on 1st March 2024. Next part, Akhil's draft profit for the year before correction of errors was this amount. This is the draft profit before correction. Calculate profit after items 1 to 5 have been corrected. That's the end of the question. All right, let's begin to answer part A2. In order to answer part A2, we have to go through all these 5 errors. Let's begin to read. Akhil prepared his trial balance on 29 February 2024. The total of the debit side was $83,640 and the total on the credit side was $84,025. The credit side of the trial balance is greater by the debit side. Greater by how much? Check with your calculator. The difference is $385. Right, the difference between the credit side and the debit side shows that the credit side has a higher amount by 385. If this happened in the suspense account, we'll see that the difference on trial balance will be reflected on the debit side. Right, it's held in the suspense account tentatively to make sure the trial balance can balance. And let's find out what are the errors and make correction. Let's begin. The total of the sales journal for January 2024 is 3,416 and had been credited to the sales returns account. Correct double entry. The should be entry is to debit trade receivable, right? Trade receivable, and to credit sales by this amount, 3,416. Right. Now they have an error. The error they have done was to credit sales return. So the error done was debit trade receivable, and they have credited sales returns. With this error, what we need to do is to strike this out. In order to make the correction, what we do is to debit. To reverse the sales return, we debit sales return 3416. And we have to bring this journal entry into effect. We credit sales 3416. Right. So this is the correction entry. We'll drop this answer into the journal. For error number 1, we'll debit sales return to reverse the error 3,416, and we'll credit the sales account to bring into effect the actual transaction. Number 2, A direct debit for insurance of this amount had been credited to both the bank account and the insurance account. Once again, we take a look this way. If they pay insurance through direct debit, the correct entry without any error is to debit insurance expense with the amount and credit bank. However, in scenario 2, they have made an error. The error that they have done was to credit insurance and credit bank. Therefore, to make a correction, to correct this error and to make sure the correct journal for the transaction is recorded, we will have to reverse this wrong entry, right? This one, we have to strike out. Therefore, by 115. At the same time, we have to make sure this take effect the actual insurance expense. Debit 2 times of 115, which is, after that, we'll credit the suspense account. Right, with that, the correct journal entry has been effected and the error has been removed. Let's put this into the journal answer for error number 2. We debit insurance expense, 230, right? 115 times 2. The first is to reverse the error. The second is to record the expense. And we'll credit the suspense account. 130. 3. Discount allowed of $47 had been credited to the account for discount received. If there is no error when a discount is allowed, we will debit discount allowed, right? The company or the business will give discount to whom? To accounts receivable. So we'll credit accounts receivable or trade receivable. The term commonly used in IGCSE is trade receivable, right? When trade receivable pay to Akil, this business that we're recording, Akil give trade receivable discount. So credit trade receivable to reduce the amount outstanding from trade receivable, debit discount allowed as the expense. However, we have an error here, right? This discount allowed, it has been credited to the account for discount received. Credited discount received, $47. And credit trade receivable, $47. Now to make the correction, we have to remove this error. To reverse it or to strike it out, we have to debit discount received. They strike out. And then we have to take this into the account with discount allowed. $7. Thereafter, we'll credit the suspense account by $94. Okay, we'll transfer this correction into the journal table. Debit the discount received to reverse the error. Debit discount allowed to record the actual transaction. And credit suspense account. Okay, this part of the answer only requires us to make correction 1 to 3. Nevertheless, we'll look into 4 and 5 and make the correction readily because in the last part of the question, we have to check the impact of this correction on the profit. So we'll look into 4 and 5 and make correction accordingly. Number 4, a payment for office equipment of $52 had been debited to the stationery account. So let's look at it once again. In a correct situation, when payment is made for office equipment, we have to debit office equipment, which is a non-current asset account. Right, a payment we can credit bank or cash. It doesn't matter. The question don't tell explicitly, but it's been paid. But the error done now was that they have not debited the right account. They have debited stationery account, right, which is an expense account. And this one goes through the same, payment has been made. So once again, we have to remove this error. We strike out, we reverse that. So we'll credit stationery. $52. And we have to make sure this is effected. This is being effected into the records. We will debit office equipment. This is $52. That's the correction, right? We note down here that the office equipment. Number 5, the purchases journal for February had been overcast by 90. So this is an arithmetic error. Purchases journal, the total, they total up wrongly, is higher by 90. Therefore, we have to reduce that amount. To reduce that amount, we credit purchases by 90 and we debit suspense account by the $90. Let's review through the type of error being done here. The first one, right, this error is an error of commission. It's an error of commission because both are revenue account, right? They should credit sales account with this amount, but they credited sales return. The impact is that revenue is recorded or impacted as the same amount, the same value, but is put as a credit into the wrong account. Sales journal should be credited, but they credited sales return. Number 2 is also an error of commission because it's insurance account, but they have credited it instead of debiting it. Okay. Number 3 is also an error of commission because both discount allowed and discount received are nominal accounts in the income statement. Number 4 is an error of principle. Office equipment is not current asset. Stationery is an expense account. Okay. The last one is casting error, arithmetic error. Now they sum up wrongly. Which of the errors listed in 1 to 5 is error of principle? That will be error number 4. That's the answer. Okay, that's the 1 mark each for A1 and A2. As for part B, right, the total of the 7 marks is awarded this way. 1 mark each for the correct amount and account. That's the total of the 7 marks in part B. Okay, part C1 done. Part C2 now. Prepare the suspense account. We have read in the beginning of the question on the trial balance date, right? There's a difference on trial balance of 385. The credit side is greater, so the difference on trial balance in the suspense account is over the debit side. So the date is the trial balance date. Let's look at our correction here. Number 2 will have the suspense account credited by 230 for insurance. So we credit accordingly. Insurance. 230. This is error number 2. Error number 3 would have the suspense account credited by discount received and discount allowed. So we record accordingly. Right. There are still other errors, although not inside the table for part B. We have made correction here. Right. Error number 5, we will debit the suspense account with $90 for purchases. That's from error number 5, $90. So all corrections done, we recorded into the suspense account. Let's close this suspense account. Let's sum up the debit side. The total of these 3 items on the credit side is 334. The suspense account is still not yet closed. There's a balancing amount of 334 minus 475. There's a balance carried out of 151. So we bring down the balance to 1st March. Right. The reason there's still a balance in the suspense account because there are some other errors not yet discovered or corrected yet. Let's look at the marks allocation for part C2. 1 mark for correct amount and details over here, and 1 mark for correct amount and details over here. These two both are correct, another 1 mark awarded. And finally, the correct balance brought down as the total of 5 marks for part C2. The last part of the question, let's check the profit after all the corrections from 1 to 5 have been done. Let's begin with the profit before correction. Draft profit. We'll add. Let's look at the errors first. Error number 1 won't affect the profit, reason being this amount has been credited. It should credit the sales account, but it has been credited to sales return. This credit, after we make correction, we debit sales return and credit sales, is still a revenue impact. The revenue is not increased or decreased, therefore no effect to the profit. Error number 2, right? Insurance expense should be a debit, but it has been credited to the insurance account. The impact of the error, the credit to insurance account, was the revenue. After the correction is done, we strike out, we remove this incorrect revenue to make it an expense. Therefore, it will reduce the profit. It will reduce the profit later on. Discount allowed is an expense, right? But the error to credit it as discounts received, make it a revenue. It will cause an increase in profit by this error. So after the correction is done, the so-called incorrect revenue is removed and the expense is recognized. Therefore, it will reduce profit. Okay. Error number 4, right? Payment for office equipment is a non-current asset, right? It has been debited to stationery account. When the error happened, it's treated as an expense. After the correction is done, we remove this error, this expense is removed. Lesser expense results in higher profit. We'll add on to the profit later on. Next, purchasers journal habit overcast. Overcast means the sum has been overly high by $90. When purchase is high, cost of goods sold is higher, right? But it's not that high. We make a correction, purchase should be lower. When purchase is lower, cost of goods sold is also lower. That will result in a higher profit, right? Therefore, in our answer later on, we will add these two and deduct these two from the profit impact. We'll add error number 4, which is $52. We'll add error number 5, which is $90, right? We can subtotal here. 142, right? Then we will less error number 2, which is $230, and error number 3, which is $94. We subtotal here. So let's sum up. The adjusted profit is 17,238. So we name it clearly, draft profit after corrections. Let's look at the marks allocation. This 1 mark for each item here correctly added and deducted, and the 1 mark for the correct profit after correction. That's the total of the 5 marks for this part. That's the end of the question.